Hello and welcome to the Be Formless Flow Driven VC podcast. I am welcoming to the show today Scott Kelly. And Scott, this is where we reshape life leadership and investing from the inside out. Welcome to the show.
Thanks for having me, B. I appreciate it.
Yeah, I'm very honored to be talking to you. Let's start with the fact that you have raised over 5 billion throughout your whole entire career. I'm pretty
Yeah,
sure you're like,
I've had a pretty good journey as both an entrepreneur and an investor. I've been doing this for about 35 years. I'm from the New York Stock Exchange in the early 80s, investment banker, taking companies public in the early 90s. I launched three internet startups that I exited between 93 and 2000. And with Black Dog Venture Partners, I founded that company in early 2001. And since that time, we've worked with our syndicate of 13,000 investors, helping companies fund, scale, and exit their business. We've been fortunate to help about 30 companies exit during that time. And it's been, honestly, I tell everybody I tried to retire twice unsuccessfully. The first time was in 2000 when I moved to Arizona, and the second time was 3.5 years ago when I moved to Florida. But I just love what
yes.
I do.
Yeah, so you're in St. Petersburg in Florida. I've never been to Florida. It's a sunny state. It's always sunny in Florida, isn't it?
It's sunny often. Now, that is a misnomer. We do get a fair amount of rain. We're a bit of a drought now, but, we've been through hurricanes. I've been through 2 hurricanes already since I've been here, so it's, mostly sunny, but sometimes, not sunny.
Yeah. Well, without stealing all your thunder, I am going to introduce you appropriately. Like you said, you're the CEO of Black Dog Venture, and I actually do have to ask you later how you came up with the name Black Dog. Black Dog Venture Partners, and you're the founder of VC Fast Pitch, which is a really cool platform. I shouldn't say cool, but you know what I mean. Like we'll talk about that as well because you sounds like you're on the road a lot. But as the CEO of Black Dog Venture Partners, it's a business accelerator, like you said, helping founders, funders scale and exit through one of the largest investor ecosystems in venture. And for more than 3 decades, you have worked on both sides of the table, supporting entrepreneurs while connecting them with angels, venture funds, and strategic partners. I love that you've been on both sides of the table. Through Black Dog Venture Partners and your VC Fast Pitch platform, like you said, you've helped founders raise billions in capital, building bridges between startups and a network of more than 13,000 investors and also 40,000 business partners. It's quite the number. Your work focuses on turning these promising ideas into investable companies by strengthening founder narratives, readiness, and go-to-market momentum. There's so much in that I want to unpack with you, actually. You also host your own podcast, so no doubt you're assessing how I'm going as I'm hosting of the Emerging Managers podcast, where you explore the next generation of venture fund managers shaping the future of capital. And so that's fascinating in itself as well. We've got a lot to talk about. And what I guess articulated from doing my research on you and connecting with you the other week was at the core of your philosophy, great companies don't just raise money, they build ecosystems where founders, investors, and operators, they all move forward together rather than in a disconnected manner. Where do you want to
Exactly.
start? Start 35
Exactly.
years ago?
Well, it takes a village to grow a startup
Yeah.
into a thriving company. And, the village starts with the founder and the co-founders and their team. But obviously, you add investors, partners, clients to build that company around that community. And that's truly what we do. Most of my job is really connecting people with opportunities to solve their problems and create opportunities for them to grow their company. And that's a day doesn't go by. I don't connect a founder with somebody that can help.
Is it generally, Scott, the founders that are contacting you saying, I need help? Or do you notice that they're almost, as an entrepreneur, you sometimes get caught up in your own head or you get stuck and you can see it. They're on the treadmill, right? And they're like kind of grinding away and they're not prepared to put their hand up, like put the hand up for help. Like,
Well,
do
we
you
get,
generally get them? Yeah.
you know, in a given month, I'll receive, literally hundreds of pitch decks from entrepreneurs that are looking to raise capital or grow their business. And part of what we do is really assess, one, do they really need to raise money? because the vast majority, of entrepreneurs should really just grind it out, should bootstrap it and grow their business and sell their product or service. But there's a point in time when the company really wants to grow quickly, really wants to scale rapidly. They need help. They need extra capital. And so we help prepare them to raise capital, put them in front of investors, but we also help them generate revenue, build their team, help them scale, because that makes it a more investable company. And then it really provides success for all concerned.
Yeah, it's interesting, isn't it? Like in terms of like how long, like what's the time frame of grinding it out? Like I'm always intrigued by this. Like, is it 2 years, 3 years, 5 years, or does it depend on product market?
It really can depend. If you look at the statistics, here in the US, and I'm sure it's the same over there, is, 90% of companies fail in the first 2 years, and 75% of companies that raise venture capital fail. So it takes more than just money. It takes some guidance. It takes the ability to surround yourself with smart people and, people that know what you don't. And I think that's probably one of the most important things that we help founders discover is the things they're good at, but more importantly, the things they're not good at, and helping them find those people that are good at those things. And that's really how you build a company and be successful.
And what are you seeing at the moment that founders are not good at, Scott? I mean, there's so much happening in the world. Everything's rapidly evolving. This year in particular, it feels so
Sure.
fast.
Well,
Yeah.
I think the thing is that, we work with a lot of technical founders, and they may be good developers, good engineers, but they don't necessarily have marketing skills or accounting skills or understand the legal ramifications of running their business. And I think that's where a lot of founders fail. They try to go too far and too long on their own without bringing people to help. And obviously, like you mentioned, the environment's changing dramatically, with the advent of AI. The expectation now with investors is not that you're going to raise millions of dollars and hopefully have an MVP in a few years. They expect you to be able to build a product today and sell that product and service today. Founders have to be willing to adapt. They have to be willing to pivot because every good idea might not be the right time, or you might right talking to the right people, and you have to be willing to pivot and change as the market tells you.
Yeah, it's really interesting, isn't it? That whole ability to pivot and change, because sometimes we get so stuck on something as well. We think it's a great idea, but at the end of the day, like you say, it comes down to timing and all of that. Tell us a little bit about this VC fast pitch platform that you
Mhm.
have and the community that you've built or the
Yeah.
ecosystem you built around it.
Yeah, it all started about 15 years ago. I attended a pitch event in California, and frankly, I was disappointed in the result. These were entrepreneurs that were, frankly, presenting their idea, their livelihoods to people that weren't actual investors. They were getting maybe getting advice, but weren't getting capital. And so we decided to really turn it upside down. We don't have a long application process. We make it available for anybody who wants to present, and we screen the investors. And so by the time they come to our event, it's not a competition, it's not a practice. You're actually talking to active angel investors and venture capital firms. And we've had great luck. We've done over 60 events. We raised $130 million just from those events alone. And we've had some incredible success stories of founders that, you know, uh, just done tremendous things as a result of being at our event.
Tell us about the screening of investors, because there's always this like investor. It's almost like what I'm hearing, not from you, but just from different people I've spoken to from a VC perspective. You're either a pure investor or you're a founder, but then there's also the hybrid like you, where you've been a founder and an investor.
Yeah,
Like,
you
what are
do.
you looking for when you're screening them?
When we look for them, honestly, we want to make sure we have the right mix of the right type of investor. I think a lot of people, the reality is the name of my event is a little bit of a misnomer. We have a lot of venture capital firms, but because we're working with early stage companies, we have a lot of angel investors and high net worth investors. So they're going to be more inclined to invest in early stage startups. So I think, part of what we try to do is match the group of investors in the room with the group of companies that are presenting. Make sure they're investors at the same stage as the company's presenting, and make sure they're in the same industries as the company's presenting. Because a lot of times founders will just go out there and go after investors with buckshot and hope that they can connect with somebody on LinkedIn, send their pitch deck and their DMs and raise money. And that's the farthest thing from reality. This is a relationship business. You need
Yeah.
sure, you need a lot of investors to talk to, but you need to have a lot of investors to talk to that you have relationships with because people are still investing in people.
Yeah.
And that's really what we try to do.
Is that like a quick like a quick cash shot? Is that what you mean by a buckshot? Did you say buckshot?
Yeah, well, what I mean by that is that you want to make sure that you talk to them and tell them what they need. I tell people my events, they get 5 minutes to pitch. It's timed. At the end of 5 minutes, they are cut off. And so what they need to do is be very succinct about what they're telling the investors because the goal is to get a second meeting and to be able to tell more information about the what's your opportunity. And so that's really what we try to do is give investors the opportunity to see companies they may not have seen, but more importantly, give entrepreneurs to get in front of investors they may have never been able to meet. I have had countless times where a founder tried to send a pitch deck to an investment firm and got turned down immediately, then came to my event and that investor was at the event and then made an investment.
Yeah.
It's really important to be able to get into the room, but get into the right room. And that's really what we try to do.
I think you're so right because we're kind of like there's so much forms of communication now, and just to send a pitch deck to somebody, like things get lost in email, things get lost in messages. But like you say, the real chemistry, the real relationship is when you're in the room together and you can feel someone's passion in terms of what they're, excuse me, pitching, and then understanding more if the investor is, in it, like, kind of tangibly in it, like, invested in this founder.
Sure.
I mean, you must see that all the time in terms
Yeah,
of like
I mean, there's things that, the unknown skills, body language, how do you communicate with people, eye contact. It's all some of this is just basic communication in sales, which you really can't communicate over email. You've got to communicate that face to face. And honestly, you're asking investors to give you capital that 9 times out of 10 will go to zero. So you've got to really be on your game and really have a good relationship with them because they're taking an extreme risk, investing with you.
is that a real stat, like actual stat? Like 9 out of 10, it goes
Sure.
to 0?
In the venture capital community, the large venture capital firms, they invest in a ton of companies, knowing a lot of them are going to fail, and they're counting on a handful of the companies doing so well to make up for all the losses and make a good return.
Do you think, Scott, like, I was going to ask you, 35 years in this space, what's actually changed over time? Has much changed? Or like, I mean, obviously what you're doing is very different in terms of from relationship and the ecosystem you're building. But yeah,
Well,
what have you seen that's changed and hasn't?
the things that have changed are obviously the more efficient communication styles. When I started, you had to fly them around the country, you had to use the telephone. Today, you have the internet, you have social media, you have Zoom calls and Riverside and things like that to communicate to people. That's changed over the course of time. But I think the same basic core of being able to sell yourself and sell your company still exists. It's still about building relationships. It's still about problem solving. I tell entrepreneurs all the time that they have to really identify a problem that's a very big problem for a lot of people to this investor, but then they have to tell them why their solution is better. Is it faster? Is it cheaper? What's the competitive advantage? But yeah, so obviously the forms of communication have changed. I think at the core, in relationships and being able to talk to people hasn't changed.
Yeah. And I don't think it's going anywhere, do you? Like, I mean, in terms of that relationship building, I think more than ever, it's becoming more and more pertinent in terms
I
of,
hope not. I mean, obviously, there's a lot of buzz out there about AI, helping investors do due diligence. There's a lot of talk out there about AI helping companies build their companies. So the robots haven't taken over yet. It's still about us human beings.
do you think they will? Like, I mean, do you, like, I mean, in some of the people I've spoken to, again, in the VC space, like, and you would see this, there's a lot of founders. So there's a lot of AI native companies, being born, being birthed as we speak, right? But,
Mhm.
which ones are actually legitimately going to be long term? Like you called out the internet, 3 you've, sold
Right.
or, built 3 internet companies.
Well,
I think yeah.
it's interesting you make that comparison because a lot of today has the same look and feel, venture capital and the internet in the 90s, where, back in the 90s, we had some really good companies that were started like Amazon and others, but then you had literally tens of thousands, if not hundreds of thousands of companies that put .com on the end of their name and really weren't legitimate internet companies. You're seeing some of that now today. There's a lot of companies that are calling themselves AI companies and, maybe they haven't really built any technology. They put a wrapper
I
around,
was about to
some
say.
LLM,
Yeah.
but at the same time, the internet helped some industries become more technologically advanced, and AI is doing the same thing today.
Which industry, Scott? Like, I mean, SaaS, there's a lot of concern with the SaaS companies at the moment. There's a new
It's the ones you don't think about.
mm,
There's industry like construction,
yeah.
real estate tech. We have a portfolio company that is in the construction tech business, and what they do is they're using AI to do their takeoff estimates. And typically, an estimate for a developer could take days or weeks to get done. And this company is able to use AI tools to generate those estimates in minutes or hours, and that saves a lot of time and money and allows a contractor to be able to send more estimates out to more people. And so there's some really old-fashioned industries that are really gonna use AI, one, because it makes it technically more savvy and more efficient, but equally important, there's a generational shift in some industries. Everyone talks about the wealth transfer, from one this generation to the next. Part of that wealth transfer is transferring businesses from the father or the mother to the son or daughter. And in construction, you're finding people that have been using either little technology or no technology 40, 50 years, and now we're handing it off to their children, and all they know is technology.
Yeah.
And so you're finding some industries that are really gonna make some quantum shift, that's one industry. Things like, auto dealers and auto lending and lending in general is really being impacted by AI and creating more efficient tools to help people, sell better, find risk adjustment better. So there are some real industries that have been doing the same thing for decades that are slowly moving out of the Stone Age and are gonna be really interesting technology companies, in those industries.
It's fascinating you talk about the 90s and you talk about, like, where we are now, and, it's like we're doing a full circle, right, in terms of, and even, like, I was speaking to someone on the pod the other day, and what you're talking about is a common theme coming up, and he talked about this traditional entrepreneur. They're coming back with a vengeance. And, when you talk about construction and real estate, and I was speaking to somebody yesterday, and they were telling me about their son, who an electrician by trade, and he's using AI to work out when he's going into, I'm not explaining myself very well here, but when he goes into like a commercial building,
Mhm.
like what he's got to take in there. And I was like, it's fascinating, isn't it? Like
Yeah,
that.
electricians, in the HVAC space, they're using technology to determine, just-in-time inventory management,
Yeah. See, yes.
where to place everything. You can model a whole commercial building, through AI as opposed to having to do a walkthrough. Is really revolutionizing some of these industries.
Yeah. Tell us a little bit about the emerging managers. So,
Mhm.
like we've been talking a little bit about next gen, and you interview them from a venture fund managers shaping the future of capital.
Yeah, what was the how this came about is in late 2024, there was an article that came out in the US that the 3,200 venture capital funds in the US, almost three-quarters of the money invested went to the top 25 funds. And so that told me these newer venture capital fund managers have a difficult time finding investors as the startups do. And so what we're doing with the Emerging Managers podcast is showcasing and interviewing these new managers, these up and coming managers. And we're really giving them a platform to get in front of, potential limited partners and investors for their funds. And we've had some some really good success. We've had several of them that have been on the podcast that just organically found new LPs for their fund. And so it's something that we've been doing this for the last year. We're going to continue to do that, and it's just become a really good way to let people that if they want to invest in venture, they don't necessarily have to invest in one startup. They can invest in a fund. But which fund do you pick? Do you pick the large fund that everyone knows about, and maybe the returns aren't very good, or you pick a smaller fund that they're trying harder and working more and getting better returns, and the statistics play that out.
In terms of like that's really interesting, but also in terms of the fact that these emerging managers, what are you seeing that's different in them in terms of their leadership style as well? Are you seeing a difference between like if again, let's go back, like the VC ecosystem as we know it and, investors, etc. What are you seeing that's different about these leaders?
I think what you see different is because they're smaller funds and newer funds, they have to do two things. They have to provide niches. They have to be in a certain geography or concentrate heavily in a certain industry that they have some expertise in, as opposed to investing in all kinds of companies from all over the place. That's the one thing we've seen. The other thing we've seen is that they tend to be more proactive in helping the companies. They're not simply just investing in the companies, they're actually helping them with their go to market, helping them build their teams, helping them build strategic relationships. So the old story, the old saying is if you're number two, you try harder. And that's really been the case with these emerging men.
It's interesting. And also, like, tell me a little bit about that in terms of their work ethic. Like, it's kind of always my outside view has always been on the VC ecosystem before. Now playing in it, talking to people in it, for example, has always been just whatever it takes. Like, very transactional, whatever it takes.
Mhm.
Work hard, play hard, 24/7 sort of thing. It's quite brutal. Are you seeing that changing as well in terms of
I think that is changing. And I think you're finding, from a generation standpoint, when I started in the business, in the 80s, I was working, 14-hour days, sleeping on under my desk. You don't see as much as that today. There's a real, and I think it's a healthy thing to have a healthy work life balance. I'm fortunate. I live right across the street from the water. So I'm, you know, on the beach, in the water, being active because you got to clear your head because we're in a high risk business, but has a lot of perks. You get to find out about a lot of great opportunities and meet a lot of great founders. But at the end of the day, work is good, but you still need to recharge and refresh. And I think that's been, kind of a good generational change, this time around.
Yeah, I couldn't agree more because I was similar. I used to go nights without sleeping, when we were in pitch mode with business and things like that. And I don't know how I did it now. Tell me the other thing I've been observing is women. Women entrepreneurs, women seeking funding. There's a real gap between the male and
Yeah.
the female.
Yeah.
What are you seeing in that space?
It's still a significant gap, in relationship to female founders and male founders. It's, single digits for women founders in terms of that, which is unfortunate because the reality is you're finding that the returns and the risk quotients of female founders are better than men. And I think it's getting better, but, I don't think it's getting better fast enough. You're finding more women getting into venture and investing in companies. I think what happened is that if you think about this, if you start back at the 90s, all these entrepreneurs became very successful with their companies, had exits, and then became investors. And so that took decades and maybe even a generation to go from being a struggling founder to having an exit to being a professional investor. And I think the same thing's happening on the women's side. Now women are becoming successful founders, are starting to have exits, and now becoming investors. So again, there is a significant gap. We've interviewed several women fund managers. There's a gap, and there's no denying that. But I think as more female founders become successful and have exits, they'll start becoming the successful female investors.
So again, it's like a cycle, right? But do you think there's a barrier for women, or is it just that women, the various conversations have been,
No,
women?
I mean, sure, I mean, I think there's always kind of barriers out there. I think, the reality is, it's an unfortunate part of human nature. People like to do business with people they're comfortable with. And, for, hundreds of years, men have felt comfortable doing business with men. And honestly, now and women now are finding the similar scenario. Women are being more comfortable doing business with women. You know, I long for the day when gender or race have no factor in any of these decisions. But again, I think you're seeing some change. There are more women CEOs coming on, not enough. There are more women general partners of funds, but not enough. But again, fortunately, you know, uh, are there still barriers? Absolutely. I think the barriers are less accepted as they
Yeah,
were a
yeah.
generation ago.
There's also barriers as a woman. Like we create our own barriers as women, right? Like, when you talk about risk and things like that, quite often, we have this self doubt. We're not as confident. We won't just like go for it. And I'm not saying it's all, but I mean it's men and women. But I do think there's a huge opportunity in terms of more women taking the reins, and like you say, from a cycle perspective. Have you been interviewing women in the emerging managers on your
Yeah,
podcast?
we've interviewed several of them on the
Yeah.
podcast, and,
Yeah.
it's good to, and honestly, the interesting thing is when they're emerging managers, their struggles are probably parallel to the male emerging managers. They're both
Yes.
having trouble
Yeah.
raising enough capital, because basically, being a successful fund comes down to 2 things. One, your ability to properly invest, but you can't properly invest until you have the money to invest.
Yeah.
And so that they think emerging managers of all types, deal with both of those issues.
Yeah. I've got a couple of final questions for you, and you just raised a really good point, and it comes back to being a founder, but also an investor. It's that catch 22 when you need to invest as a founder, like you need to have your crew or your support people around you. You need additional resourcing. But you don't have the cash flow. You don't necessarily have the revenue coming in to be able to afford it. What sort
Mhm.
of advice to you, and I guess same on the flip side of an investor, right? Needing to invest to grow to grow, but just that, cash flow,
Right.
challenge.
Well,
What do you
I
Yeah.
think founders need to ask themselves some hard questions.
Mm.
And the first hard question is, are you dedicated enough to take the risk yourself? And what I mean by that, are you willing to borrow money? Are you willing to, Uber in the weekends? Are you willing to do things that most people in a career don't do? Number
Yeah.
one. And then the next hard question is, if you do you really need or want to raise capital? Because keep in mind, when you bring on an investor, you also bring in another opinion. And
Yes.
that may not be the opinion you want to hear. And so you've got to be really cautious about that. And I think entrepreneurs should really seek all kinds of alternative funding. Here in the United States, I'm sure over there too, there are grant programs. There are opportunities to get loans and debt, which on the surface seems like bad financing, but in more cases than not, the cost of capital is cheaper than venture. So I think it comes down to one, if you're not going to take the risk, why? And then determine if you're going to have someone else take the risk with you, you have to really look hard and fast at that. Because again, there's been a lot of successful businesses that haven't raised any venture capital. The irony is that I've helped literally thousands of companies in this regard, but I've never taken any outside capital myself. I have completely grown my business bootstrapped from the very beginning, so I've gone through, 3 exits of my own. So again, the irony is I help companies, raise capital, but if I were to tell them, be frank with them, I say, look, just go sell more of your product and service and let
Yeah.
everything else take care of itself.
Yeah. Was there any moments in your career, Scott, where you were like, "Oh my god, it's over"? Like, in terms of, you've obviously done 3 exits, you've been hugely successful, but, like, it's not always shiny, right? There's
No,
always
yeah. It's always, interesting that, we had a very good run during the dot-com boom, but we had a tremendous, downfall at the end, you know? Everyone was do the reality is everyone was able to hit a home run up until late '99, and then everyone was striking out, me included. So we had several we had a lot of success stories, but we had some pretty phenomenal failures, and sometimes you look at that and go, "Okay, maybe I should do something else." But that's the business we're in. That's the game we decided to play.
So what kept you going? Like, second last question, what kept you going in those moments where you're like, maybe I should do something else?
I honestly, for me, I love the game. I love the growing things. I've been a risk taker my entire life with everything I've done. I like taking something from nothing and creating something from nothing. And that's the reason why I came out of retirement the second time is that I love talking and working with these young entrepreneurs that have nothing but fire and vinegar. Some of them don't have a clue, but they'll just keep trying hard and they'll stumble their way to be successful. And I'm grateful I get to help them stumble less.
I love it. So Scott, tell me, last question for you. What do you think is what does it look like if you were to like look into a crystal ball in the next 12 or so months, maybe 24 months? What does the ecosystem look like? What does the VC?
It is going to be a lot different from two respects. One, technology is already changing, is gonna rapidly change how companies are being built. Gone are the days where you're gonna raise millions of dollars and hire hundreds of developers and programmers. Those days are gone, and they're gonna be more gone soon. And on the investor side, I think investors are leaning into using AI to do due diligence. You know, there is honestly, I there are several cases where in the last week I've had investors go, "Look, I don't have an analyst. I have a bot. I have an agent that's
Yeah,
gonna tell me whether or not I should take a phone call." So those are things that are already changing, and they're gonna continue to change.
fascinating. And then what would be one piece of advice that you would give to any emerging fund manager, any founder, given that
Mhm.
you have been in this career for a long time, 35 years, it's incredible. You've come out of retirement twice. What would be your I guess, what would be your advice in terms
I
of
would tell you 2 things. 1, do it until you're not passionate anymore, number 1. And 2, when you don't become passionate, pivot and find the passion.
yeah, I love that. Good insight as well. Like, just yeah, don't be what was the second one? Don't be when you're not passionate, pivot.
Pivot and find the passion again.
Yeah, I love that. So good. Yeah, and I think sometimes we need to do that on a daily, right? Like,
Agreed.
if you for me, it's follow the energy. And it's funny, this podcast, some
I
days
mean,
I'm like,
I love pizza, but I don't eat every day.
no,
You gotta
yeah,
change things up.
yeah, you do. You absolutely do. And it's just that continuously shaping and reshaping. We can't just stay still. It's no longer linear. It's non-linear. Scott, how do we find out more about Fast Pitch? How do we find out more about Black Dog? Oh, actually, where did the name come from?
The black dog came from my, black lab named Mike, and I've had 4 black labs since then. I can't get a different color dog ever again because of
So
that
cute.
reason. So,
I love that.
but yeah, you can obviously reach out to me at blackdogventurepartners.com is my website, vcfastpitch.com if you wanna learn more about our pitch events. I can always be found in LinkedIn and social media at Black Dog CEO. And if anyone listening wants to get some free startup tools on how to fund and scale your business, they can send me an email to scott at blackdogvp.com.
Love it. Yeah, you've got quite a following on LinkedIn as well. So get on board, everybody. Highly recommend you reach out to Scott, a man with so much knowledge and experience. So, Scott, thank you for coming on the show. Truly appreciated your time. Have a
Pleasure to be.
wonderful rest of the week and a nice evening tonight.
You too. Thank you.
Thanks, Scott.